Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Flutter Entertainment. Don't let the name fool you, we are talking about serious money, not butterflies. We're going to break down their recent announcement about raising a whole bunch of cash through new debt. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. This Form 8K is like a quick update a company gives to the Securities and Exchange Commission, or SEC, whenever something important happens. In this case, Flutter is telling everyone about how they plan to borrow over $2 billion. This report was filed in May of 2025, so all numbers and details are up to date to that date. The main event of this report is the announcement that Flutter is issuing a bunch of new debt. They're planning to sell €1 billion dollar-denominated notes, and $450 million in euro-denominated notes, and $450 million in British pound-denominated notes. In total, they are raising over $2 billion in equivalent debt. When a company sells notes, it means they're borrowing money that they promise to pay back later with interest. Let's talk about these notes a bit more. The US dollar notes have an interest rate of 5.875% and are due in 2031. So they are sometimes referred to as long-term notes. The euro notes have an interest rate of 4.0000, both also due in 2031. These are called senior secured notes, which means if Flutter were to go bankrupt, these lenders would get paid back before some other lenders. The secured part means that Flutter has likely pledged some of its assets as collateral, giving these lenders even more protection. In addition to the notes, Flutter is also setting up a new term loan B facility. A term loan is just a loan that has a specific repayment schedule. The B part usually means it's a bit riskier than other types of loans and often has floating interest rates. This facility is denominated in US dollars, but the report does not give us the amount. All of this is subject to the usual closing conditions, and they expect the deal to be done around June 4, 2025. This means there is a risk that for some reason the deal will not go through, even if this is usually unlikely. If you wanted to learn more, the press release is attached as an exhibit to this report in Exhibit 99.1. You can look there for more details. This report also includes some legal language about who the notes are being offered to. Basically, they're selling these notes to big institutional investors like pension funds or insurance companies, and not to the general public. This is a common way for companies to raise money without having to go through all the red tape of a public offering. They are not selling these notes to just anyone. Now, let's step back and look at the bigger picture. What does it mean that Flutter is raising all this money? Flutter Entertainment is a massive player in the online gambling and sports betting world. They own some of the biggest brands in the industry, like FanDuel, PokerStars, and Paddy Power. They've been growing rapidly in recent years, especially in the US market, where sports betting is becoming legal in more and more states. Raising this much debt likely means they have big plans for expansion and investment. It could be to fund acquisitions of other companies, to invest in new technology, or to expand their marketing efforts. The company did not give any details on this in the report, however. One thing to keep in mind is that taking on more debt always comes with risk. If Flutter's business slows down for any reason, they'll have a harder time making their debt payments. However, with strong brands and a growing market, they're probably confident that they can handle the increased debt load. Looking at Flutter's overall situation, they're a dominant player in a high-growth industry. The online gambling market is expected to continue growing rapidly in the coming years. As more and more countries and states legalize it, Flutter is well positioned to take advantage of this trend with its established brands, large customer base, and technological expertise. Of course, there are always risks to consider. The regulatory landscape is constantly changing, and there's always the possibility that new laws or regulations could hurt Flutter's business. Competition is also fierce, with many other companies vying for market share. If there is a big scandal with one of their companies, that could damage their reputation. One thing to note is the interest rate that they are paying. If rates go down, the company might refinance this debt or pay it down. If rates go up, their financial situation might become difficult and they might be forced to sell assets or companies. Overall, Flutter Entertainment seems to be in a strong position, but it's always important to keep an eye on the risks. Their decision to take on more debt could pay off handsomely if they continue to grow as expected, but it could also create problems if things don't go as planned. Alright, that's our breakdown of Flutter Entertainment's latest debt offering. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.